Hi there. In this video, I'm going to outline to you the reasons that gold is such an attractive investment at the moment. Do you know that in the last 3 recessions we've had, gold has increased in value in every single one? I'm going to be explaining to you some of the fundamental reasons that make gold really attractive. I hope you enjoy this video.
Now, looking at gold at the moment, there's some very strong fundamentals that are all coming together. And before I start going through those fundamentals, just want to take a little look at some of the historical bull rallies we've seen in gold over the last 50 years. Now, if we just take a look here at gold's rallies and slumps over the years, the first big gold rally was around 1970s when central governments gave up control of the gold price. And that resulted in a very strong bull run as individuals and private owners were allowed to have gold. So that's why we saw this huge rise in gold during the 70s. Now, the second major bull run, some of us maybe find it easier to remember, when we saw 2003 and 2011 saw a huge gold run here. And what happened is annual demand for gold went up from 2,600 tons to 4,700 tons a year. And this major bull rally coincided with the global financial crisis. That's when the gold bull rally really took off in 2008, 2009. We had a coordinated cutting of interest rates by central banks, and that really made gold an attractive investment. You can see price rocketed up to 1920 an ounce, nearly hitting $2,000 an ounce. So that's some of the historical rallies. And interestingly, in the global financial crisis, we had central banks cutting interest rates. That really made gold an attractive asset. And we're seeing exactly the same now around COVID-19. We're seeing the coordination of central banks cutting rates, which is really boosting gold as an asset. So let's just go through some of the fundamentals for gold. First of all, we're heading into an environment where we've got negative real interest rates. Now, let me explain what that means. If you take a look here at the interest rates of these countries, you can see how low they are, okay? And they've been getting low all the time, and there's talk about RBNZ going to negative interest rates, Bank of England having to talk about negative interest rates. Jerome Powell has said that he's not going to negative interest rates at this time. But all these low interest rates, what they mean is that when a country's inflation is above their interest rate level, it means that cash loses money in the bank. So imagine if you get 0.125% interest in your bank account, but inflation is 1.5%, that means you're losing the difference between those two every year. So cash is literally losing money. So that means cash is being devalued. And that's one of the key drivers for investors seeking returns from other assets like gold. Now, normally gold has some disadvantages because it doesn't hold a yield. And if you hold it physically, you often have to pay storage costs. So as a result, gold is not the first port of call for an investor. But in a very negative interest rate environment, it offers a lot of attraction. Now, let's just go back to our presentation here, and we can see that quantitative easing devalues currencies. Apologies for the typo. So the quantitative easing that's going on across the world, the Federal Reserve launching literally unlimited quantitative easing, all of this further devalues a country's currency. So it makes an asset like gold more attractive. Also, gold is a recession safe haven. Take a look at the last 3 safe havens. You can see here, recessions rather, 91, 2001, 2007 to 2009 global financial crisis. In these last 3 recessions, you can see that gold has increased in every single one, okay? So gold is a go-to place during recessions. So that's just, as many countries are about to plunge into a recession, it's helpful to know how gold tends to perform in a recession. Also notice that exchange traded fund holdings for gold are rising rapidly. These are really, really increasing. And I just want to show you, this is from the World Gold Council. This is the first quarter 2020 for world gold demand. And you can see that it was just over the first quarter of 2019. So what I want you to notice here is that demand has come heavily from these exchange traded funds. Okay, look at the 2019 exchange traded fund demand. Look at the 2020 ETF demand. It's growing, and it's getting even more since this last publication. Now, look at the jewelry demand here. You can see jewelry was quite high in 2019 first quarter, but look how low it is here in the first quarter of 2020. That makes sense, doesn't it? Because of COVID-19 lockdowns, people haven't been able to go and purchase jewelry. When people start coming out of lockdowns, we're going to see that figure rise, and then we're going to also see exchange traded funds rise. So overall demand is rapidly increasing, and the ETF inflows gives us a really good insight into that. We've got the Federal Reserve pressing on with huge amounts of support for the US. We also have some stock market valuations are seen as very high by some. So some investors are unwilling to invest in the stock market because they feel the valuations are too high, and so they would rather stay in cash. But of course, if your cash is losing value in the bank, you'll look for other assets, and gold is a very respected and reliable hedge seen as by many investors. So it's likely to see more inflows. Finally, we've got a technical breakout of coiling inside bars. Let me just show you here that technical breakout. You can see here, this is the gold spot chart. We saw this coiling inside bars, coiling. I was flagging this up before it happened. You got coiling inside bars on the weekly chart. Whenever you have this coiling action, price is heading for a breakout. On the daily chart, we broke out the ascending trend line. Whenever you get a close and a break, it's a good indication that technically that's a sound break, and then price is moving to the upside now. And if we get a bullish close at the close on this weekly candle, that will confirm the breakout on the weekly chart as well. So technically, there is looking like upside as well. So I hope that gives you a good insight into some of the fundamentals that are really going for gold at the moment.